Hey everyone, John Henry here from School of Trade, and today we're going to be talking about the pipe reversal pattern. Now, the pipe reversal pattern is a pretty easy to find pattern, but it's kind of difficult to find the ones that set up correctly. Now, basically, this pattern is just a form of exhaustion. What you're looking for is that final push, whatever the buyers or sellers have, and that's when they give up, and then you see the reversal in price. Now, this pattern is, it's pretty easy to find, but finding it setting up correctly is the hard part. Now, there are some kind of little quirks about this that need to set up specifically. So first things first, we need to find a new high or new low candle on the chart. Now, this has to set up on the current day's high of day or low of day. And it needs to exceed those highs or lows by more than 10 ticks. Now, we don't just want to see, a small push of a new high or low. We actually want to see some conviction behind that push. So just as a side note to that 10-tick rule, it also has to happen within one candle. And what I mean by that is you can see right here, we're pushing these lows down here. And, we make a new low here, we make a new low here, we make a new low here. We're looking for this measurement of those new lows to see if those are above 10 ticks. And if they are, then we can start looking for the pattern. So in this case, the high of this candle is here, the low of this candle is here. So measuring from the low of that candle to the new low of day, we should have more than 10 ticks. So in this case, if we measure that, the low of that candle is at, 1288.3. So 1288.3 down to the lows is 17 ticks. So we've got more than enough room there for that final push candle there. Now, the next step is finding the reversal candle, or the one that goes in the opposite direction. And really, the only thing that this candle needs is to close above or below that previous candle that pushed those lows, highs, or low. Now, I know that sounds kind of complicated, but looking at this candle right here, we know that the low of the candle is here to here, and we went 17 ticks here, so we've got more than enough room. The next candle, if we bracket off the candle that pushed those lows, the next candle has to close above the closing or down candle in this case, because we're looking down. It has to close above that candle's high, which if we look, and let me make this line a little bit smaller so we can see here, we can see drawing across here, this candle closes above this candle's high. So now we've got a convicted reversal candle. Now we know that we're good to go in terms of looking at the pattern itself and that it's setting up correctly. Now, we know the pattern is there, but how do we enter the trade? How do we get into the trade? Well, really, in terms of getting into the trade, we've already had that signal fire off for us. We had that close above that previous candle's high. That's going to be your entry right there. You're going to be entering in at that close of that candle. Now, you might be able to limit in a little bit lower for a better entry, but that's going to be your entry trigger. Now, where do we place our stop losses? Well, the stop loss is going to go at the bottom of the candle down here. That was the firing off candle. So that's the one that we want to use for the stop loss. Now, you want to make sure that when you're placing a stop loss, you're not risking more than 5% of your account in any single trade. So just keep that in mind when you're looking at the trades and always kind of keeping that in the back of your head. But you want to put the stop right below the low of that triggering candle there. Now, in terms of the profit targets, looking at this trade, the profit targets are actually relatively easy. All we're doing is measuring the candle that pushed the lows in this case. We're measuring that candle, and we're basically just copy-pasting the distance, up 1 for the first target, and up 2 for the second target. Now, what I mean by that, and we can use a little Fibonacci extension tool here, we'll measure from the high of the candle to the low of the candle, and we're just right back to the high of the candle. And the first target is going to be 1 to 1, which means this 100% area right here. And again, all that is that's just measuring this candle, the candle that pushed those lows, measuring it, copy pasting that distance, and then just plotting it right up there. And then doing the same thing for the 200% extension, which is the next target, a little bit farther ahead of that. And you can see a lot of people saw that happen. As soon as we tagged that 100%, we bounced right off of it, which is a really good sign. So those are going to be your profit targets. We know the stop is below the low, and we have the entry trigger as well. And the pattern itself is just it's a really, really strong pattern. It's just, like I said, kind of difficult to find setting up correctly. And that's the big key behind it, is you want to make sure that it's setting up correctly before you get into the trade. So that's going to be taking a look at the pipe reversal pattern. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one.